Well, we're going to head into our triple play now and the three stocks that we're watching. So my pick to kick us off is General Electric, ticker symbol GE. Now, adjusted profit and revenue beat to round out the disappointing first quarter and cautious full year down about 10.5%. It was down about 11% in intraday trading as well. Now, this actually makes it the biggest sell-off in about 2 years. Its aviation and healthcare segments did grow, although healthcare still fell short. Its power and renewable energy segments also fell, and by more than expected. Now, as part of the challenging market environment for the company, CEO Larry Culp said supply chain issues, the Russia-Ukraine war, and China COVID impacts adversely affected revenue in the quarter by about 6 percentage points. Now, company executives say they expect those same pressures to continue to weigh into the second quarter, and that while adjusted Q2 free cash flow will remain negative, it should be better than Q1. So not a lot to cheer about there for GE.
Yeah, taking a look at this past 5-year chart, it really kind of weaves in many of the things that you mentioned continuing to be a headwind for GE, the executive changeovers, the supply chain issues, and then additionally being able to sell off some of those other business units really being the only boon to when we saw some of their shares move higher previously. The roadway and the roadmap for this company going forward from here, there's a lot of different categories, both in the consumer tech side and then additionally in some of, as you were mentioning, the aviation side as well. Larger question looming, though, is when they will be able to still get back into the good graces of investors for an extended period of time. And that is not the case here right now as we're seeing the stock being traded out of here on the day. My pick for the day in our triple play is Nike. Trading lower in the equity markets, actually one of the worst performers in the Dow today. But there's good news. Its virtual inventory is trending higher in the cryptocurrency market, positioning the swoosh for the metaverse. Nike Artifact, they acquired Artifact in late 2021, and the first drop resulting from the deal has begun. The Artifact by Nike Dunk Genesis is going for an average of, get this, 3.5 Ether or Ethereum, so about $10,600. The virtual sneakers are selling at even higher prices than some of the rarest physical Nike limited edition shoes. For comparison, a pair of the Jordan 1 Retro High Dior in my size is selling on StockX for just shy of $10,000. The added consideration here is that you can buy multiple limited edition skins for the virtual sneakers. So Rachelle, Dave, what I need to know is what is the most that you would pay for virtual footwear? Dave is already hitting the facepalm here on the day.
I'm with you, Rachelle. I'm with you, Rachelle. I would not pay a dime. I am bearish on this. And I'm just wrapping my mind around people paying $10,000 for shoes they never wear, they put in a closet and show off. And now we're talking about 10 grand for shoes you cannot touch. And to quote one of my Twitter followers who retweeted this is the ugliest shoe I've seen in a long while. Brad, I do not understand this trend. For 1 minute, you mentioned the other skins.
Yeah.
The other skins are $2,500 on top of your $8,000 investment.
Yeah. Rachelle, you're
magic beans. It's magic beans you're buying. I will say they did have another one that had like the cute, like Apollo-looking wings on them. Even though they're a lot, I did quite like those. But the fact that I can't actually wear them, I'm not paying for that. No.
Wow, this is astonishing. I'm going to take a while to really, truly fit. Yeah, go ahead.
There were so many metaverse characters that didn't even have feet for the longest time. So we're already buying sneakers for the ones out there, those avatars that we're still trying to figure out how to get legs on everybody in the metaverse. So there's that we got to figure out too.
It's a great story. All right, Nike down. Everything's down today, so it's hard to pick a winner, and my stock is down as well, but it is Delta Airlines, DAL. Did you know, folks, that flight attendants do not get paid for the boarding process? That was news to me, but now Delta Airlines will pay their flight attendants for the boarding process, the first U.S. airline to do so, although they are the only U.S. airline that is not yet unionized. There is a unionization push going on at the Atlanta-based airlines. They did get a pay raise. It was 4% back in March, their first since 2019. This is a certain concession to this group that looks like they'll unionize their 25,000 flight attendants. As for the stock, well, you heard there Ed Bastian, their CEO, say this is the best March they've ever seen in company history in terms of bookings, and that's why the stock is up 4.5% on the year, but it is down today just about 2.5%, as is pretty much everything, Brad.
Yeah.
I mean, and I do feel for the flight attendant staff. I mean, they've already had to put up with rowdy passengers. And then if you think of the number of times you've been delayed after the staff have already come on board, the fact that they weren't being paid hours and hours for these delays, I do think this is a comeuppance that was really needed.
No question.